Hey there, welcome to Be the Boss of Your Money. I'm Mitch Goldberg, your host, and this is my live stream all about the stock market, finance, interest rates, inflation, saving for retirement, spending money in retirement, paying bills, being more efficient with your money. Sometimes it's not a matter of making more money, it's a matter of doing things to help you keep more of what you own. But one of the ways one of the ways that we have more money is by investing for the long term. We invest in the stock market because we expect that companies will reinvigorate their earnings. They will go through cycles, of course, and they will grow again. New companies are always coming up. I mean, during the tech wreck of 2000, when people thought technology stocks would be dead forever, there was no Facebook, there was no Google. That's right. There was no we didn't have these. There was Amazon, Apple, and Netflix, but they were, I don't even know if Netflix had gone public yet. Okay. But they were very small compared to where they are now. What we did have was ExxonMobil, General Electric, AT&T, Lucent. These were the big heavyweight stocks of that era. I mean, there was also Cisco and Intel, but those Cisco and Intel, they never regained their past glory as the big stock market winners. Microsoft was up there, and they certainly have, but it just goes to show you the biggest tech stocks of 2000. Outside of Microsoft, I can't think of any. And don't get me wrong, I know Nvidia was around back then, but I'm talking about the biggest companies then becoming or remaining the biggest companies today. So Nvidia, for example, was trading back then, but it was a much smaller company. It wasn't one of the heavyweights. So a worry in the back of my mind is that the heavyweights of a particular market don't stay heavyweights forever. But companies like ExxonMobil, AT&T, and IBM, they did stay as heavyweights for decades. And then they don't. It's really not something that we could time. It's just something that you invest for over the long term. And if you feel a company has gone up, let's talk about selling in a minute. But there's a few things I want to talk about, like new stock market highs. The Dow Jones Industrial Average broke 38,000 for the first time ever today. So let's just roll a quick intro, and then I'll just wrap this show up pretty quick because I know you have things to do, and so do I. Have to go to Uncle Giuseppe and buy dinner. Okay, here we go. All right, we're back. Welcome to the live stream. Be the boss of your money. A little hokey, be the boss of your money. But you know what? If you're not the boss of your money, then your money is the boss of you. Remember that. How to sell a stock. I've been asked in the past, should I sell a particular stock? Whether it be Apple, Tesla. No one's asking me if they should take profits on Nvidia. That's pretty interesting, given that it's up so much and continues to make new highs. But I think there's a lot of recency in these stocks, and as long as it's going up, people aren't going to be asking you. When they start to go down, is when people start asking me, "Do you think I should sell it? Should I sell some?" I want you to make your decision in a little bit more what I think could be a beneficial way for you. If you're just throwing money into stocks and hoping they go up forever, that's okay for a while. But you get to a point in life, most of us anyway, where we have to consider how we're going to pay our bills after we walk away from our active income. Your active income is from your employment. And the idea is that there comes a time when you realize, I'm not going to have active employment for much longer, or maybe you don't have it anymore. And you have to rely on pension, Social Security, and your investments. And maybe you have passive income from other investments, from real estate, what have you, from other businesses that are more like absentee ownership, or your kids are in a business and they're paying you some money just to breathe. That's all good. But nonetheless, the investing part is a pretty big part of the equation. Your investments are a big part of that, and you need to know when you should sell. And if you don't have rules to live by, you're it's not going to work for you, because what happens is you ride them up, you ride them down. I'm talking stocks, whatever investments you have that you are. I'm talking about the kind of investments that would go in a brokerage account, an IRA, it could be ETFs, mutual funds. You need to have some rules about when you'd sell. And maybe you want to limit any position to how big it could be in your portfolio. Maybe you'll say, no investment should be worth more than 5 or 10% of my portfolio. Or maybe you need to say that I'm going to sell a little bit of what went up over 30% or 20%, or went up a lot to an extent, but give it a number. And that's when you would sell and maybe hold on to some for the long term. There's lots of ways to do this, but mostly you want a strategy, client first strategy, right? To help you decide when to sell. I think the best sell decisions are really made when they're based on your life cycle. That's a nice way of saying, or a cool way of saying, personal finance. You get to a certain point in life where you know you need an emergency fund. You know you need insurance to cover emergencies that exceed your emergency fund. I bet you never thought about insurance that way, but that's how I look at it. And then you need money in savings that's going to be needed over the next year or two. It could be worth 3 years. That's a personal decision that we would talk about. And the rest is invested. The rest could be invested for more income or more growth or more stability. You have lots of options for that. But that's basically the framework of an investment plan. And when you have that framework, you could start to build on that. So it's not a matter of let me think how I want to say that. So it's not a matter of, should you take profits on a stock that's up a lot? It's a matter of what is coming for you, what's in your near future. That's how you should think about the sell decisions. The sell decisions should be based on how a stock fits in your portfolio. Is it too big a percentage in your portfolio? Well, how do you define what's too big? Right? If a stock goes up and up and up, it'll eventually become a bigger and bigger part of your portfolio. At what point do you scale some back? At what point do you say, if the stock were to reverse, the company's fortunes went from good to bad, and the stock goes down a lot, given the big size of my portfolio that it represents, would that hurt me financially? It might be yes, it might be no. Right? Probably yes, that makes more sense. These are the reasons why you would buy or sell, not just because the stock is up, or just because some analyst on TV said, "Oh, I would take some profits here," or they would say, I wouldn't, I mean, hold it here, but I wouldn't buy more here. This is basically what I'm saying. They don't know. They don't know, and they're twisting themselves verbally into pretzels to give you an answer of whether or not you should sell it or buy it here. It's almost as bad as the expression, but we're not out of the woods yet. So I'm going to make all kinds of bold predictions, but then I'll finish it by saying, but we're not out of the woods yet. So if things go down, I get to be right too. We are never out of the woods. There's always another worry. So speaking of worries, we are at new all-time highs in the stock market. Never before this high. And yet some people, if you tell them that, they are shocked. They're like, really? Since when did that happen? Well, first of all, we ended 2023 very close to hitting new highs in the S&P 500. By the way, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. Oh my, I say that every day. So the S&P is up less than 2% this year. But we were so close to all-time highs at the end of last year that we only had to go up a little bit to reach a new all-time high. That happened on Friday. It continued today. The Dow Jones made a new, not just a new high, but a new milestone. It broke 38,000 for the first time. And like I said 2 weeks ago, the next big goal for the Dow is Dow 40,000. And before you go, whoa, Dow 40,000. I remember these predictions like 30 years ago, right? The Harry Dent predictions. He's mostly wrong, so I'm not giving this guy more credit than he deserves. Well, I shouldn't say that. Maybe he's right, maybe he's wrong, but he's welcome to come on my show and argue his point of view. But the point is, 40,000, there were predictions out there that the Dow would reach 40,000 one day, and they seemed impossibly high. And here we are, just a stone's throw away from 40,000. In 2000, the Dow has to go up another 5%, and we're at 40,000. You know what's interesting? The S&P 500 is at a new high today, and people could say, oh, it's too high. But if the S&P 500 grows at 7% annually, compounded growth at 7% annually, it'll double in the next 10 years. So is it too late to invest? I'll borrow a phrase from Warren Buffett. If you think the stock market is expensive today, just wait another 20 years and it'll be really expensive. Something like that. And here we are. New all-time highs. What got us here? People were afraid. People were nervous. The market got very wobbly the last few days of 2023. Down for the first week and a half, down quite a bit. It seemed like the rally was over in the first week or two of this year. We were overly excited about interest rate cuts. Maybe we won't have as many interest rate cuts as we expected. Investors got ahead of themselves. Nobody wanted to sell their big tech winners because, they wanted to put off the capital gains taxes until this year. Here we are. The big tech stocks are going up. They're up, but they're not the only ones that are up. There's lots of sectors that are up. Oil, the price of oil just cannot seem to go up. All right. The U.S. is pumping about 13.5 million barrels a day now. We are the biggest oil producer in the whole world, more than Saudi Arabia, more than Russia. We're a big oil producer. In a few years, we're going to be producing more than what we actually need. And we're already exporting, so we'll be exporting more. So if you want to know why oil doesn't go up, even though OPEC and OPEC Plus keep cutting production, it's because we're keeping the world well supplied. We're keeping ourselves well supplied. I just filled up my tank, by the way, for $2.75 in Smithtown a couple days ago. That was yesterday. So there's a few other things that are taking place. So listen, I understand the war in the Middle East, the war in Europe. I'm not discounting those, but the oil never did what people thought it would do. Price of food never did what people thought it would do. All bets could be off. Things could change. But as of now, the doomsday sayers have been wrong consistently. And after a while, you have to start to think, maybe they're just perma bears. They're always going to find something to be negative about. They're always going to say, but we're not out of the woods yet. But what got us here is that a lot of the big bad things didn't happen. I want to focus your attention on this. Okay. This is an article that came out on Friday by Jeff Cox. He's a prolific writer and markets editor for CNBC. He quoted me. I was very happy and honored to be quoted. Why is the stock market going up? But here's my quote. You see that? Mitchell Goldberg. If investors are looking for a reason to be negative, it's hard to find. Or just keep in mind that when I get these calls, it's not like I'm expecting them. It's a call out of the blue, and you've got to be quick on your feet. It's not like I am emailing carefully considered replies to questions, right? Said Mitchell Goldberg, president of Client for Strategy. The 24-hour news cycle is so insane, but the fact is a lot of it is noise, and a lot of it has nothing to do with economics and personal finance. There's so much information overload now, but to break it down and put perspective on things, what's not to like about the stats that are coming up? There's more to it. I posted it on my Facebook page. I posted it on Instagram. So, keep an eye out for it if you want to read the full article. But a lot of the bad things didn't happen. a lot of the good things did happen. We never got a true earnings collapse in corporate America. Oil didn't go to over $100 a barrel. So far, the war in Europe and the war in the Middle East has not become regionalized as of now. I do get the sense that Israel would love to wrap that up, and they've been pulling back some troops. The Ukrainians and Russians seem to be at a standstill. Hopefully, the Ukrainians can break through that. And the supersonic Kinzhal missile that Russia said would evade all radar would be the ultimate weapon of war turned out to be not such a big deal. I mean, it's a big deal for those people who, but our Patriot missile system has been able to target those, lock into them, and knock them down. A lot of things didn't happen. A lot of the bad stuff didn't happen. I think the market's reaching new highs more for what didn't happen than what did happen. Inflation never continued at 10% or above. The Fed didn't jack interest rates up even more than it did. The 10-year yield did not stay sustainably at 5%, the 10-year Treasury yield, for much time at all. It was almost impossible to buy 5% on 10-year Treasuries unless we're buying the zero coupon bonds, which we talked about doing right here on the show, if you recall. Pretty good deal, right? And, well, you're not getting that deal now, but at the time it was, I think, a pretty good deal. But those are the things that got us here. And the economy. Employment continues to do well. A little bit moderating, but continues to do well. Home builder sentiment improved. Retail sales stronger than expected. We're getting GDP at the end of this week, and we'll see what that is, but I don't hear anybody's worried about it. If anything, the market is not as weak as we had hoped. I'm talking, if anything, the economy is not as weak as we had hoped because we want the Fed to act more quickly and more aggressively. The economic news, if anything, it kind of puts the Fed on hold and leaves rates where they are, as opposed to a few interest rate cuts in the first half of this year. I don't think it matters if the Fed cuts a few times in the first half of this year. I think the key is that the Fed does get around to cutting rates by the end of this year, and that's good enough. Higher interest rates are really more of a problem, not just because it could slow down the economy, because it makes the cost of financing everything more expensive. Getting my winter cough back again, right? But the important thing to understand is that when rates are high, it causes things to break. For example, do you remember when Silicon Valley Bank collapsed? It led to the collapse of First Republic and Signature Bank. That was an example of something breaking from the Fed raising rates. But it turns out those particular banks ran their books very poorly. They were acting more like hedge funds doing a carry trade than they were acting like banks. So that became isolated, and it didn't spread to the rest of the banking system. Plus, the Fed stepped in with a couple of very powerful programs. But nonetheless, I don't see anything breaking. There's no mortgage crisis. There's no subprime loan crisis. Foreclosures are low. Employment is running strong. The amount of people participating in the workforce has been growing and not shrinking. Price of fuel is lower. And interest rates, long-term rates have come down. And short-term rates, even most of the yield curve, most of the short-term rates, including the 2-year, the 1-year, and the 6-month, have all come down. It's really hard to find things to dislike about the economy and the stats that have been coming out. So we'll see what happens. But if you want to know why the market has been doing so, or the stock market, obviously the stock market. I'm not talking about the fish market, right? Okay, but that's why. I thank you for watching. Your watching this means so much to me. If you have any questions, please ask me in the comments. Even if you're watching this in the replay, I will see those. I will get back to you. If you don't mind, give us a thumbs up, please. Just helps the cause, always helping the cause, spreading the good word, the knowledge, the information, the education. That's what we're all about. And I'll be back tomorrow. Thanks so much for watching.